Hi, this is Tom Essaye from Money and Markets TV. The biggest story of the week has been the $2 billion loss by JP Morgan's Chief Investment Office. The incident has prompted a lot of negative commentary, and JPM's stock price has suffered. After all, news like this usually causes traders to sell first and ask questions later. And that's usually the right move, at least in the short term. But as a contrarian investor, the story is making me take a harder look at JP Morgan and the overall banking industry to see if there may be an opportunity there. In order to make that call, we first have to determine if the damage could be catastrophic to the company itself. Then, we have to see if the incident is company-specific or indicative of a larger problem for the sector. In the case of JP Morgan, the trading loss will surely mean lower earnings and a lower stock price. And it's definitely embarrassing. But the company is just too well capitalized to be in any danger of collapse. As for the second question, all the research so far shows that this problem is inclusive to JP Morgan and not reflective of the sector as a whole. This tells me that there may be indeed a contrarian opportunity here. But now the question becomes, is JP Morgan a buy right now? I do think the stock is currently undervalued, but it's likely to fall even further before it recovers. That's because the eventual loss will probably be bigger than $2 billion. And the different macroeconomic environment may also put more downward pressure on the shares. So I'd keep an eye on JP Morgan on the way down and then consider buying the weakness in anticipation of long-term strength. When an industry leader like JP Morgan stumbles, it tends to bring down the entire sector. But as I said, this trading loss appears to be an isolated incident. If you're very pessimistic, you could make the case that it's a negative for all of the large investment banks. But what about regional banks? They don't have big trading operations like JP Morgan. In fact, their business models are completely different from the multinational investment banks. But they seem to be selling off in sympathy with JP Morgan anyway. I think this weakness is unwarranted and presents an interesting contrarian opportunity. One way to play it is with the KBW Regional Banking Index ETF, ticker symbol KRX. It's designed to track the performance of the U.S. regional banking industry. Remember that with every crisis comes an opportunity, especially for contrarian investors who are paying close attention. I'm Tom Essaye from Money and Markets TV, and thanks for watching.